Let me know, guys, if the audio is okay. One, two, three. Okay. So looks like 50 basis points, like the CME Fed Watch tool was expecting. So Bitcoin, I mean, literally pushed all the way up to what, 18.4K, 18.35, now touching 17.9. Powell should be speaking in like 15 minutes, 20 minutes. Yeah. What I was looking for, we have some support here, but what I was actually looking for, to be honest, was short. We have some confluence right here. I was hoping we got a push up somewhere around 19.5. I was looking to short 19.5-ish around this area right here. And I had an order set for actually 18.6 right here, but that didn't get hit either. But we'll just have to see how this plays out. So yeah, I mean, it's a good sign though. We're headed in the right direction, hopefully. But he's going to be hawkish for sure. 100%. I'm actually interested to see. We peaked at 18.3 actually. 3. What I really want to know is that, was the dollar falling? Was the dollar collapsing? Does anyone? So the dollar fell as low as 103. It's still holding this zone. Not a bad point to short, honestly. I mean, you know, usually as he starts these things, as we lead up to them, private markets start to push up a little bit. But it is interesting. I mean, yeah, this right here, I would say. Yeah, that's what I was interested to see, is how the DXY was actually performing there. I wonder, did anyone end up taking this short position on the S&P? Let me see. I actually love the Ichimoku cloud. This is my favorite indicator for support and resistance, but right here, this short position, I still didn't enter, but I mean, we got another opportunity. I'm really interested to take this short, even though I don't really trade stocks. I mean, even if we could just get a push down to here, that's huge for the S&P. 7%. S&P is still kind of holding 4,000 level right here, which is pretty key zone. Looks like it could be a double top though. You see, but you know, there is a lot of volume up at 19. Yeah, I'm actually interested. Stocks are, you know, but the nice thing about Bitcoin and trading crypto is you really do have a good understanding of the market that you're in. You know, with stocks, it's like every day there's so many different things going on, and so many. With crypto, at least you can focus in on one security, one asset. You know, we actually do have a lot of volume up here. Not sure when this volume started forming. 19.2K. There's a lot of volume. We've pretty much grabbed all this volume. So I wouldn't be surprised to push up to 19.1, honestly. I don't think I posted the link in the Discord for the stream. I think, or it's fine for now, but in a little bit when the Powell speech begins, maybe we should let them know. But did you notice this, Amir, this liquidity up here? Or this trading volume at 19.1K? I didn't notice this. Not that much of a stretch to push up there. Oh, okay, I see. Yeah, live streams are the hardest. Like it's actually not that hard to get videos out to people, and like if you do the SEO correctly and keywords, description, all that, it's doable. But live streams, YouTube still hasn't figured out a way to get smaller creators out to the world. Way harder to get a live stream out to people. So when is this? 2:30, okay. Exactly, that's what I've been looking for. I mean, I've been looking for the perfect short. That's what I've been waiting for, literally. I've just been waiting for that perfect short, which I think this would be one of those opportunities. We've all been waiting for the perfect short, haven't we? So, is there any other news, or is that it? I mean, sure, he will say a little bit more. I'm interested to see what he says more than just the rate hike. I think 50 basis points was kind of expected, but we have to just hope that we've seen the, you know, it would be very bad if he had to go back and readjust and do another hike. That would throw all the markets off. Because a lot of people thought 50 basis points would actually be bullish. I don't think it's bullish. I think it's just sideways. I mean, I don't know if it's anything good. Local McDonald's, yeah, same here, man. We need this bear market to come to an end. And you know, it is crazy that we're complaining and Bitcoin's at 18,000. You know, I would have expected bear market bottom to be way lower, but who knows? We may not be at the bottom yet. Let's just go to degen time frame. That's crazy though. We've literally recovered. I mean, we had a lot of trouble. We've been having a lot of trouble just this zone right here. You know? We were just able to recover that and break above, all the way above to 18.3, which is interesting. Yeah, and the worst part is it's actually, I believe, you know, consumer prices are going down, things are settling down, but there's still employment inflation, wage inflation, energy is bad. I mean, we just need, it would be the point I'm trying to make is Powell can definitely go a little bit too low on the rate hikes and readjust, but he can't go the other way around. Can't go the other way around. That would be very bad. Major moves coming. I didn't even expect, you know, I don't know. Do you guys think, do you think this has topped out right now? Ethereum wedge, let me check. Do you think Bitcoin has topped out right now for this volatility, or do you think we go back higher? What do you think? Ethereum wedge on what, 4 hour? Yeah, the actual economy. Interest rates are horrible too. I'm getting fucked. I should have fixed my interest rate. It's possible, yeah, I agree. I mean, I'm still took out a huge loan for an investment property out here, and I'm stuck in the same rate. I mean, I'm every rate hike I'm getting screwed on the daily. I should have fixed my rate. It's crazy. I mean, Ethereum, but if Ethereum, to be honest, Ethereum still, this is a very key, this is really important right here for Ethereum. I haven't been watching Ethereum that much actually, but this is a really important zone right here. Because to be honest, if Ethereum were able to break above this zone right here, actually break above 1330 and close above, I don't see why it couldn't push up to 1550, 1600. This is a super important zone right here. Yeah, hopefully. I mean, I think 2024 we can really start to see some positive movement. You know what's really interesting though? There's a couple of charts I was showing, like this one right here as well for Bitcoin. You can just see this is like, I've been looking at this very closely. This also lines up with the short we were talking about. The key zone, like I said, I mean, I still think 30,000, 25, 30,000 would be important to break above, but this is really significant right here. Yeah. Okay, yeah, I mean, yeah, I mean, I can see quite a few things. This is huge level right here, 1330, huge. I mean, it's been since June. Since June, we've been kind of battling with it, breaking above, traveling around it, consolidating around it, so. I was really interested to see here if we could break above this for Bitcoin. But I don't know, a lot of the analysis I've been looking at, I mean, it just looks like Bitcoin is probably the most undervalued it's been in a while. For the longest period of time at least. I believe this is now the longest bear market, but we have so much FUD. I mean, if Binance collapses, that's not a good sign. Right? I mean, I don't know. I think it's FUD. I don't think Binance is insolvent by any means. I don't think so. But if that were to happen, that could take us a whole lot. That could take us way lower than we thought. I think if we see a Binance implosion or a USDT Tether implosion, I think we could see $6,000, $7,000, $8,000 Bitcoin. I mean, look at this. Binance withdrawals have hit $3.7 billion in a week. That's not good. But I know Binance does have the liquidity to handle this, to be honest. I know that for sure. Really funny seeing all the exchanges now tell people that they should that they should really get into DeFi and they shouldn't be holding all their crypto on it. It's actually funny to see them saying that. Never thought that would happen. Yeah, because I don't know if Bitcoin really were able to break 18, 19K. I don't see why it couldn't push all the way up to 21. And it's sad, I had my short position set right here. Right here. Right here. Missed it just by a small margin. But I'm much more interested to see what he actually says here. I do want to hear his tone because he's going to be answering some questions. Apparently SBF has been arrested as well. Just, I don't know which one's worse. Tether, I mean, no, Binance imploding would be probably far worse than Tether, but this has a more of a stigma to it, because when you think of a stable coin, I mean, stable coin. So much FUD. I don't know if you saw this. Coinbase is actually telling its users to switch from USDT to USDC. So that's really interesting. An interesting time. I really thought we would see DeFi come out, you know, stronger because of all this. You know? What I really expected, but there's no trust. The trust is gone. I don't know. Do you think if we fail this zone, 17,000, because it's been quite a few times now where do you think if we fail 17K, we head back down to 15? I think we're due for a correction here soon, for a dump. I mean, we've been in this uptrend for quite a while now, right? Yeah, that's true. I mean, there was always Bitfinex, and there was COVID. Just in general, though, this uptrend, I mean, not sure how much longer we can continue. I've been looking for short positions for a while now, but it just continues. Just continues pushing up. And like I said, I mean, I'm fine with long positions, but I prefer to follow the trend. The trend is your friend. Let's see, are we live? Not yet. Not yet. Yeah, but I mean, I wouldn't be surprised. We have so much liquidity up there, or volume. We have so much. At 19.1K. Honestly, right here. Yeah, I mean, if I were to look for a long position, I would love to enter a long position at 15.5, even 16 flat, to be honest. But it's clear now what happened. I mean, we clearly just got rejected right here. Yeah, 16.5 still the point of control. But you know, to where we are right now, the location we are right now, you know, in terms of price, it wouldn't be too far of a stretch to push up to here and then dump back down. That's what I was thinking. So I've been looking for the right short. Been looking for the perfect short position. Okay, I see. You guys trade mostly based on volume and the heat map? There's a lot of volume actually way down low. Really way far down low. There's a lot, to be honest. You know, I love using this interface, but it's so slow. It's so slow, but I love using it. Yeah, you're right. I mean, actually, I don't see it. I see a lot of volume down at 9,000. Huge volume at 9,000. 19.1, 16.6. We're just waiting now, guys, for the live stream to start so we can hear what Powell has to say. Couple more minutes. 3 more minutes. Want to know what he has to say. I was very interested, though, to look into that. I mean, do we really think that we've bottomed? Do we think we've bottomed? Do we think the S&P could come back down to these levels, 3,400? I could definitely see 3,600, but I don't know if I could see the S&P going back to 3,400. What do you think? 13.8. Yeah, I don't know why it's not showing up here. There's some volume, but I don't know why it's not showing. Not at all. I mean, there's so much volume down at $9,000 though. It makes sense. It's a huge psychological level. 9, 10K. In general, I mean, if we could just break this zone, this 20,000 zone, there's no reason we couldn't push up to 23, 24, 25. So, I mean, for the most part though, for now, suppose we just got a good push up. Good push up to the 18.4 and right back down. Let's see though, as he starts to speak, usually we see a little bit more of a push up. 17.9 though, 17.9, so we've lost 18K for now. Not good. Yeah, it starts in 1 minute, 2:30 p.m. Eastern time. It's now 11:29. I wanted to start the stream just for his speech, but thought might as well get on a little early. I really hope they're on time this time. They're never on time. You can, by the way, you can hear the audio okay, right? You can hear the FOMC audio all right? There we go. Just let me know if you can hear it okay. You want to let them know in the Discord, because my phone is exactly. I use my iPhone as my camera. Actually, interestingly enough. So I can't really, I should have tweeted it out. I'm stupid. Should have tweeted out the link. Let's see what he has to say right now. At least they started on time. Here we go.
Good afternoon. Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate.
We may actually just go right back down. I'm
Despite
not
the
sure
slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path.
Let's see what
Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025.
ETH has support, though, at 1,300.
Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
Are you looking for long positions?
At today's meeting, the committee raised the target range for the federal funds rate by a 0.5 percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Always
over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect.
It's risky. I mean, I was willing to take the short position up here, but I missed it.
The policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings.
Probably another 50.
Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible.
So he's not saying much.
We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
One thing he always says.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
He didn't say much. I expected him
Steve
to
Leisman,
give a
CNBC. Thanks for taking my
forecast
question,
for
Mr. Chairman.
next year.
You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High-yield credit spreads have come in. The economy has accelerated, and the stock market's up 6%. Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that, and how would you do something about that? Thank you.
So as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add that our focus is not on short-term moves, but on persistent moves, and many things, of course, move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP, again, for our current assessment of what that peak level will be. As you will have seen, 19 people filled out the SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more, in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows that, again, that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up if they, and it could move down if inflation data are softer.
Gina.
Gina Smilik, New York Times. Thanks for taking our questions. The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth of rate increases
Actually, I
in
wanna hear this.
2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see
So
the
another- he
speed
said
playing
another
out going
75
forward.
basis points
And then I
next year?
wonder what you're looking at as you determine when to stop.
As I've been saying, as we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw
Basically, he said
the
another 75 basis points
how strong
over the
inflation
course
was
of
and how
next year.
persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing.
Well,
I think
we knew
now
that.
that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will be.
So he's not going to say much, same as always, but 50 basis points, there you have it. We pushed up to 18.4. Now we're bouncing around here. We could easily just recover this and come back up or head back down. We'll see. But appreciate you guys for joining. And yeah, I mean, guess we'll have to wait and see what happens next. 75 basis points, a lot of people expected. I expected it too, but looks like he's basically saying he's always hawkish towards. I mean, after the rate hike gets announced, he doesn't really give much info. It doesn't sound like he's going to give much info. So
Our individual assessments of what we would need to do to get there. At a certain point, though, we'll get to that point, and then the question will be, how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way, and we think that will be some time.
It would have
and
been
why
a
do I
good
say that? If you
4%
look at you can break inflation down into three sort of buckets. The first is goods inflation, and we see now, as we've been expecting really for a year and a half, that supply conditions would get better,
Had a
and
short
ultimately
position right
supply
here,
chains
missed
get
it, but even
fixed,
from
and
18.4,
and
not
demand
bad.
settles down a
Not
little
a
bit,
bad
and
move.
maybe goes back to services a little bit, and we start to see goods inflation coming down. We're now starting to see that in this report and the last one. Then you go to housing services. We know the story there is that housing services inflation has been very, very high and will continue to go up, actually, as rents expire and have to be renewed. They're going to be renewed into a market where rates are higher than they were when the original leases were signed. But we see that the new leases that the rate for new leases is coming down. So once we work our way through that backlog, that inflation will come down sometime next year. The third piece, which is
still
something
like
like
this short- I like this
55%
short position.
of the index, PCE, and core inflation index, is non-housing related core services. And that's really a function of the labor market largely. That's the biggest cost by far in that sector is labor. And we do see a very, very strong labor market, one where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now, after not turning at all for a year and a half. Now it seems to be turning, but there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time.
Howard Schneider with Reuters. Thanks for taking the question. You described GDP growth in the SEPs as...
yeah, I don't think he's going to give us much more info. But yeah, appreciate you guys. I'll see you guys next time.